All right. Hi. Good afternoon. I've got Brad Waldman here. Again, we are talking everything mortgages, what's going on in the mortgage market right now. How are you doing, Brad?
I'm doing great. It's nice and warm out. It's 75 degrees here in sunny Florida.
I'm so jealous. It's 40 degrees up here in Atlanta. Too cold. Um, and I see there's you have some of your family members back there.
Oh yeah, there's some cows out today. They're behind me. I'm in the gator so that I don't find myself on the unfortunate wrong end of a bull
Yeah, no,
in
definitely.
case he decides to get too close.
You have how many bulls?
Just one.
Okay.
You really shouldn't have more than one out there.
How many females?
There should be six out there
Okay.
and a baby. We just had a little
Oh,
baby not that long ago.
wow. That's got to be good nature to see for your kids.
Yeah, it's an experience, that's for sure.
Yeah. The only thing I got to see when I was growing up was puppies being born. That was as far as it went. But it's got to be interesting to see a calf being born. I've seen it on video, but to see it live is totally different.
Hmm.
So what's going on this week? What big news is we just had the Fed that lowered the federal funds rate by 1/4%. Of course, I got a couple of people sending me the article like our rates down. So what are your thoughts on what the Fed did this week?
I think they should have cut by half a point instead of a quarter. We're long overdue for deeper cuts, but it's political. They're going to continue to fight Trump, and he's going to continue to fight them. And hopefully, we'll get bigger rate cuts as we go into the first quarter of next year.
Well, what I heard today was that the inflation is supposed to, what he said was it's supposed to peak in first quarter of 2026. So I'm interested to see if that means they are going to, be more aggressive with those, lowering the federal funds rate. Um, One thing that, a lot of people have a misconception of is when the Fed has a meeting, a lot of times the interest rates go up after the Fed speaks. Um, Fed does not have a direct control of the mortgage rates. The mortgage rates are more controlled by the markets and also by the 10-year Treasury. And it's kind of amazing that we've gone from the 10-year being below 4 just a few months ago, and then it's shooting back up into, almost a 4.20. So it'll be interesting to see how the Fed, and of course, yesterday, I have to say, it was an exception to the rule because of what they said when they came out. And a lot of eyes were on the labor, which of course we've had such low labor numbers lately. And if all truth be told, if the reports have been coming out accurately from the last administration, we would have probably had lowered rates from the Fed a long time ago because the employment numbers were not as good as they were making them out to be, the Labor Department. Um, but with the news of everybody was watching for the labor, it really came down to inflation because inflation has gotten a little bit closer to their target of 2%, but it's still, I think, at 2.7 is what they said yesterday. Um, so I'm just, how else can we get inflation down other than, I mean, you
Here's
injected so much money in
here's my
2020.
here's my thought. I don't think prices are really going to come down once a corporation or a company that manufactures a product, once they can get a higher price for the product, they're not going to come down. They're going to keep that price flat at best. So I try not to focus too heavily on the inflation numbers or even the job numbers. Um, it's pretty common that rates will go down ahead of an announcement and then come back up after. Similar to the stock market, you're buying on the anticipation and you're selling on the news. Rates kind of work the same way. And what I know to be, in my in my opinion, what I know to be in my gut is that we're going to see better rates. We're going to continue to go in the right direction, political or otherwise. I think a lot of it's just noise in the background. I try to focus on the day to day, and what I'm discovering is people are getting out there and they're buying houses again. I'm seeing it here in Florida, and I do lots of loans in Virginia. I'm seeing activity in Virginia actually come up a lot as well.
I think a lot of people were waiting to see what the Fed was going to do. And, the Atlanta market, there's some realtors that are strong right now, but a lot of them are cash buyers. So a lot of people are not in need of financing. So I'm slower than usual for a December. But I do think there's a lot of pent up demand, and I see there's three agents that have new listings that they're listing right after the new year. So I believe that more supply is coming. And here's something that is kind of going to throw something in the mix is that I saw a video of a man today that his task is to go around to homes that are basically abandoned. And it's because of FHA and the financing that was given to people that were not legally um, permanently allowed to be here, and they
Hmm.
have left. And he explained like pizza boxes with pizzas still left, fish dead in the fish tank. So they're not, they're gone. So there's a number of like 34 million housing units, whether it's single family homes, apartments, condos. You know, if those are occupied all by people who are going to leave, I mean, that's a lot of supply that could hit and help our shortage that we have right now for housing. What are your thoughts on that?
I don't think we're going to have as many people leave willingly as maybe you would think. But I do expect that there will be a lot of houses that do get vacated, whether they're leaving the country or whether they're just going to a different place within the country to avoid deportation or arrest or whatever you want to call it. I really don't want to get political or
Huh.
dig too deep into that, but the positive to that, I guess you could say, if you could find one, is there are going to be a ton of homes available. It will take a little time for the mortgage companies and the Federal Housing Administration to sift through that and reclaim the properties, get them back on the market. But that demand should be here in this or met in the spring, I would think.
Well, and I think that it doesn't all come down just to the housing for purchases. It comes down to rentals as well. And I have a lady that has been trying to buy a home, and she is getting help with Section 8. And, a lot of those people are saying that they are on long waiting lists because other people who are not, legally here are getting that housing first. And so I think it is putting a strain on local governments as well as state and federal governments.
Mhm.
And I'm not about pull all the politics into this, but I'm for Americans getting homes first. And FHA is a government backed entity that is taxpayers back. At the end of the day, it's government sponsored. So you are using money that is meant for Americans and subsidized for Americans for housing for people who are not legally allowed to be here. And that to me is just more of a risk. I mean, the bank at the end of the day, if the equity's there, they're not going to be harmed. But, putting those people in that situation where now they're walking away from something, that's putting a strain on the whole market. It's going to put a strain on those in having to enforce the evictions. It's just a lot of stuff that we have to deal with now to get the problem fixed when it should have never happened in the first place. I mean, I am all for legal immigration. My husband came here legally. He came here with $20 in his pocket and a dream, and he made it happen. It took 7 years, but he made it happen. That to me, those people should be allowed to come, here first and have those houses. And we've done loans for visa holders for a long time on renewals. So I'm not, that. to me is just an opportunity for more housing, which could possibly ease up the prices a little bit, depending on the locations.
I'm seeing a lot of new construction still going up as well. I think builders are getting out there and putting more property out. I don't know if the cost to build is necessarily higher now than maybe it was a couple of years ago, but builders seem to be having more confidence in their product and their ability to sell the product. I think actually new builds are becoming more popular than resale. I tend to be more of a fan of existing construction. I think property that's newer maybe is going up a little fast and there could be some corners being cut. I personally have not had great experiences building new homes, and I've done that a time or two. Personally, professionally, I've seen a lot of weird stuff with new builds. I don't think new builds are necessarily a bad thing. I think adding more housing to the marketplace is always good, but I tend to be a fan of existing construction.
Me too. I not only feel like they cut corners during COVID, but also even the lumber is not as quality as it was 100 years ago. That
Sure.
the lumber's a lot thicker. That's why you see homes just falling apart when there's a bad storm or, a light tornado. Some of the oldest homes, I mean, they're withstanding good storms, and still making it. The other thing that a lot of people don't understand about new construction is when you're buying new construction, they are incentivizing you because I mean there's and it really puts a damper on the resales in the area that are trying to sell around the same price, because why would you buy a used home at the same price you'd buy a new home? But the caveat is that by the time you roll in your options and then they offer you financing, I mean, they have ramped up that price so much that it becomes very difficult for people to refinance just a year or two later if they need to. If rates go down, those people can't. I have a situation right now. Someone came to me, they bought new construction with a 90% purchase bank statement loan. Well, they built in a bunch of options and they took that special financing. I think it's a 2 year buy down. So it's going to keep graduating up until that, third year. But he is a year and a half into it and he's 20,000 upside down.
Oof.
I can't, and so you put 10% down, but based on where the market is right now, from a year and a half ago when he bought it, it's not there anymore. So he's going to have to wait a while, and he's in a bank statement loan at 8%, 8.5%. So, those are the people that I feel are being harmed. And I had another one that bought new construction, lost his job. Um, how do and also he had built in a bunch of options, it was one of the first long-term locks that I did for new construction. And he was at 5% down. Well, if he wanted to sell, he would be upside down. He would owe money because after paying commissions, getting the sales price that it would sell for, he would not break even. So, those are the things that I kind of, it bothered me down the road about new construction. Um, the same thing with down payment assistance. You get and people need down payment assistance, they need it. But when you are 1 year or 2 years into your loan and the rates drop, and I call you back to do a refinance, we can't just ask the second mortgage or that lien, that the grant or whatever the down payment assistance is, to stay in second. So they have to get paid off, and up here in Georgia and most other programs I do. So you are detrimenting yourself, and you hope that you have the money to pay off that grant, because it's going to have to be paid when you sell, refinance, and possibly if you rent it out. It has to be repaid. So I feel like that is also getting people into a bad situation, because they rolled in everything, and then now if values have kind of calmed down in certain areas, they're not just springing up like they were. I mean, we saw some areas going up 30% in 1 year during COVID, and And like you said, now that the prices are what they are, do they even come down? It's not corporation run, but it's based on comp. So it's going to be based on what your neighbor sells for and what their neighbor sells for at the end of the day.
I've got a few tips for people that are interested in buying new construction. Certainly, my opinion isn't going to stop you if that's what you want to do. I have a couple of clients this week actually that called me looking to buy new construction, and I flat out told them that's great. I'd love to be your lender, but you're going to be offered incentives that maybe I can't compete with. So one of the gentlemen sent me his estimate from the mortgage company. It's a nationwide builder that shall remain nameless. I don't want to slander anybody or put anything out there, but you will know a nationwide builder apart from a local builder if you do your diligence. The first thing that I noticed is on his estimate, the rate was great. It was a 599 VA loan. That's about where the market is, but they were charging him a crazy amount of points. So he's getting $25,000 in builder concessions to pay towards closing costs. And the lender fees, before you even get into actual closing costs, the lender fees were $22,000. The long-term lock fee was almost $6,000. Absolutely crazy. So in the end, he's only going to get $3,000 in actual concessions. And that's what I told him. I can do your loan. We'll work out the $3,000 concession. I hope you figure that out. But before you sign anything, you need to first and foremost go hire a real estate professional that doesn't work for the builder to represent you. And you need to let me look at anything you're doing as far as financing goes, whether you go with me or not in the end, because yeah, I've done a few loans for you. So ultimately, I still want to make sure what you're doing is okay, and I want to give you my opinion. You're going to do what you want to do. Um, that was a very big, eye-opening uh, amount of lender fees for me. So it's important for people to know if you're watching this and you're buying new construction and you're being asked to use the builder's mortgage company, you should probably know that the builder, in many cases, actually owns the mortgage company. So what they're doing in this gentleman's case is they're transferring 22-ish thousand dollars in sales price from the builder's bottom line to the mortgage company's bottom line because that 599 rate does not cost that much money. He doesn't need a long-term lock-in, and he definitely doesn't need to pay 2.5 points on that deal. It just boggles my mind that's common practice. So if you're
You know
buying
what
new
they're doing, Brad? They're putting all the money in the front so they can gift the money in the back. And so it
right,
looks like a credit, but it's really just moving the
moving the
cups
money.
around. Yeah.
You're moving the money from one corporation to another owned by the same parent company.
Yep.
So do yourself a favor, hire a local real estate agent to represent you. They will get paid by the builder. They're not going to ask you for much of anything, but they will definitely look out for your best interests. And if you have bought a home before, you should also be checking with a local mortgage lender to make sure that what you're signing up for with the builder's lender is okay.
Well,
Certainly,
and
people
5.99, depending on his scores, I mean, you probably could have taken that deal and just floated it until rates may even be better by the time he gets done building
absolutely
instead of long-term locking. And why in the world are you paying 22,000 in points? You're only getting 3,000. Um, our stance would be, how about we do the loan and I give you the 3,000? I mean,
sure.
because it's six in one hand, half a dozen in the other. You're still getting the same net, but you trust and know Brad. And that's the problem with a lot of builders is that once if they get word, some of them, that they're thinking about going to another lender, they'll start playing hardball. Like they'll start, you know, dragging their feet on fixing something that came up in a, pre-drywall or whatever. I mean, it seems that it becomes more of a hard stop with them, that they don't want to deal with it. And at the end of the day, it's because they don't make any money when it's an outside lender.
There is a lot of money that transfers from one company to another. It's important for you as the buyer to ask the parties involved, ask the sales rep that works for the builder, does the builder own the mortgage company or any part of the mortgage company? And see what they tell you. And by the way, you can get on Google and check that yourself. You can see who's
Well,
telling you the truth and who's not.
what's the other thing is that they own the title company, they own the insurance company. So the builders that are big conglomerates, they're offering you the insurance policy, which I've found some insurance through the builders they're barely even covered. They're covered just if it burns down, they're going to rebuild it. But your contents, I mean, oh well. It's bare bones kind of stuff. And I just don't like to trust anybody who's got every single thing and wants me to use their title company, their insurance, their lender, their builder. It's all under one house, and there's so much more room for fraud and for deception when everybody's affiliated on the other side. That's my problem with it.
There's more to that also. I've worked for small, well, I wouldn't say small, but smaller local builders as the on-site preferred lender. And this is going back a few years when I lived in Virginia. But that builder would call me and ask me direct questions about the client and their financial situation. And you have to say no. I can't give you that information. I can't tell you exactly what you want to know. All I can tell you is that they're good. But there are a lot of mortgage, we'll call them professionals or loan officers. There are a lot of mortgage people in this line of work that will absolutely tell the builder about your situation and violate your privacy.
Hmm.
So you take a very big risk when you go with the builder's recommendation on everything. And I'm not saying you can't do it or you shouldn't do it necessarily. I'm just saying do your homework and have a backup plan.
Yeah.
So I think new construction can be a positive thing. Me personally, I like to buy the older house in the established area and make the cosmetic changes myself. That's that's just my preference, and that's what I typically recommend to people. But some people do love that shiny new house.
Yeah. They like to be able to put all the things that they want in the house. And I mean, it's just so frustrating. And even building a house, like buying land, building to spec, um, that is not for the faint of heart because you're going to be stressed to the max. Every single person I know that has built a home in the past 7 years or so, anybody who bled into that COVID time when they started in 2019, and anybody who built during COVID and after COVID, it's, the supply chain has gotten better, the price of lumber's gotten better, all those things have gotten better, but with the tariffs and certain things coming from other countries getting tariffed and supply chains being slower depending on what's going on, it has really made the construction process a lot more ugly than I remember it being.
It can be. I just think if you're going to build a new construction home, that you should go with a local builder and possibly identify more than one if you can. Most real estate professionals in your market can help you identify somebody to call and trust and to inquire with rather than going with that big nationwide builder who, there's three or four I can think of off the top of my head, and they don't necessarily build a terrible product, but you're not getting, I think, the right value for your money. I've got actually two homes right now that are listed as on the real estate side. I've got two homes that are new construction, newer, that were purchased in 2023 and 2024. The builders are still building in the neighborhood, and both of those listings are short sales because the people are upside down, but they have to move.
Mhm.
And unfortunately, that's the only thing we can do. So that's a whole nother conversation. Maybe we can have another day, short sales and how those work. And I suspect those will be coming back. I'm certainly bringing them back. I'm going to help people use the tools in my bag to do what they need to do to fix their situation.
Yeah, no. And a lot of people don't know, but different states, depending on the state laws. When you have a short sale, you are selling the house for less than what you owe. So you're practically asking the bank to take a settlement, settle with me because I can't even break even. But I have seen people where they get foreclosed on, and then the bank sells the house for, 60,000 over. A lot of people do not know that sometimes you can be entitled to what was left after they settled that estate. I saw recently one of the builders, and he buys homes that are being sold on the courthouse steps, and he flips them and sells them. But he got involved with it, and you have to be very careful because you have to be an attorney in the state of Georgia to even facilitate this. But um, basically, there's a lot of people who got foreclosed on and just feel like, okay, it's over. I've wrecked my credit and it's done. But in some cases, there is money left over that a lot of people don't know about, and it just sits. I mean, the banks can't use it. It's not like they're pocketing the money. It's that it's just sitting.
To
I
touch
didn't
on
know
short
that.
to touch on short sales briefly, I think again that could be a whole nother conversation. There's a lot to cover with short sales, but to touch on short sales briefly, the short sale itself doesn't harm your credit. What harms your credit is missing payments leading up to the point where you sell the house. And
Correct.
once you've missed a payment or two, the damage is already done. So you're not going to further create a negative situation on your credit report by the short sale itself. It's the late mortgage payments that take the score down. The short sale still impacts your credit to some degree, but not necessarily the score.
Well, and a little fun fact, because you and I both love VA loans. With a VA loan, if you short sale and you were on time at the time of the short sale, you can buy a home day one after that short sale. But if you had late payments in the 12 months leading up to that short sale, that is where the rules change. So, just be mindful. That's the only loan type that basically has that rule. But if you're a veteran and you have a VA loan and you have to go through a short sale, make sure that you're paying those payments on time without any 30-day lates, because you will be able to buy again right after the short sale is handled.
If you're not sure what to do, you need to sell your house, you think you're upside down, call your real estate agent that helped you. And if you don't like that person, call somebody else, get a recommendation. Shoot, pick up the phone and call me. I'll help you find somebody. It's not that hard.
Or
Um,
me.
or Lindsay for that matter. Either one of us can help you get in touch with somebody in any of the states across the whole country. We know how to vet people, and you need to probably get some questions answered and have your situation looked at by a professional that's licensed in your state.
Yes, definitely. And I know a lot of people, they may be short selling because they have to relocate, or, I haven't had a lot of people who have had job loss this year. I've had a couple, but one thing that Alcova offered this year, I'm not sure if they're going to follow it up for next year, is, it's something that's just a little benefit that we give as a closing gift, and it's job protection, job gap protection insurance. And I hate mortgage life insurance. It's a ripoff to me, in my opinion, because if you're going to get mortgage life insurance, just get life insurance and let the life insurance, your family divvy it out the way they need to, instead of it just going to the mortgage. Um, but I forgot where I was going with that.
Alcova offers
Oh, we offer the
a
job
plan.
gap, yeah, protection insurance, which basically this year, the main borrower, whoever was the main borrower on the loan, got 12 months of job gap protection. And although I haven't even heard of any of my clients using it, it's very helpful and something that, people don't think about. But this job gap insurance basically pays up to three payments. But make every effort if you do lose your job to keep the house over your head, because that is the most important debt to pay on time and keep on time. It's an appreciating asset. You have to have a place to stay. So, when I do have someone who falls on hard times or they lose their job, one of the first things I tell them is to contact their servicer, the company that they make payments to every month. But if you're going to be 30 days late, the first thing they're going to tell you is we cannot help you until you're late 90 days, three times 30 days late. That is going to wreck your credit. So take money from 401k, IRAs, sell a car if you have to. Do everything you can not to be late on that house, because that will wreck your credit. It will ruin your chances of getting another house. And if they foreclose, it could be 2 to 7 years before you're eligible again.
If all else fails, sell the house. Call
Yeah.
a real estate agent and sell the house.
I mean, if you have equity, but if it's a short sale and you don't have equity, sell the house, but by all means, don't be, try to keep it up until you get another job. I certainly don't want to tell you to be late on other things, but, again, you have to have a place to stay. And now, even more than ever, I'm seeing a lot of, single family homes, rental companies really, really scrutinizing rental applications and background checks and making sure that they haven't been late. And that actually brings up another topic, Vantage scores. So we've been talking about changing the score model forever. And one of the benefits of having Vantage scores is it's going to help renters over, people who've got very thick credit files. But I wonder, like, the stuff that you see on a rental application, you and I don't see on a mortgage credit pull. We only see if you owe an apartment complex because you skipped out, or they say that you didn't replace the carpet and that you owe them. But if we change to those Vantage scores, I am kind of curious if we're going to see like rental credit. And I don't know if you've ever seen one, but I have a rental property and I have a property management company. So the way their credit is that it kind of shows like every apartment, if they paid on time. I don't know what a Vantage credit report looks like on the lender side.
Doesn't sound like anything I want to mess with. I can tell you that. Sounds like
No.
that's going to open up a bunch of cans of worms and create more hardship for people. Um, I don't want to focus too heavily on that because who knows what will happen there if we will go to a different kind of report. But did you get the email from corporate or did you read the email from corporate that credit report prices are going to be going up?
Yes. Another 50%.
A credit report should not cost, it's already $150 ish per
Yeah.
person. It shouldn't even cost that. But the credit bureaus are no longer allowed to sell your data like they were. So to make up for that, they're charging the credit agencies that get the credit reports for the mortgage companies more, and the credit agencies are passing that cost on to the mortgage companies, and the mortgage companies are passing that on to you, the consumer. So we are going to see some higher costs when you're buying a home, another $100, $200 maybe, but
Yeah.
something to look out for, something to be mindful of.
Well, and it becomes more painful for a branch like you and me to just haphazardly run credit reports. I mean, if it cost me $150 literally from the start, you know, I, I am more mindful. I mean, of course, I don't mind pulling someone's credit, but it gets so expensive. And when I started in this business, the credit report was $17.
Right, 1750
Yeah,
is what it was when I started.
1750. Yeah. So, I mean, we've gone from 1750 to 150 to 158, depending on the size of the bank, I think is how they're like tier pricing it. But you know what I read, and I think it was a Housing Wire article, but there was kind of a battle between the credit agencies and the bureaus, where the bureaus were saying, listen, we only charge $3 or $6 per score. And it's the credit agencies that are charging for all this suite of stuff. You know, you get your inquiries and you get your, disputed trade lines. And if you want liens on there, if you don't want liens, I mean, like all these things that they add, that's where the money is being made. And I don't know who to believe because honestly, I don't trust the bureaus. I mean, the fact that Equifax had a major breach, and I know that my stuff was sold on the dark web multiple times because I had multiple credit cards get, duplicated and used. Um, but I don't know who's to blame, honestly. I mean, and we should not. Why are we even needing all three scores? I mean, why don't you just let us use one? Or um, there was something coming out that they were going to simplify and do a one score. I don't think that's Vantage, but if we could just simplify it where I've heard a rumor that TransUnion is more like West Coast. Equifax is actually here right in Atlanta. So I think that's East Coast. And so my thought is that if that's truly it, I mean, maybe you just pull one. But I do know that that can detriment people too, because I've seen someone's Equifax score being a 580, and then their, TransUnion being a 680, and the Experian being somewhere in between.
So the reason for that, as I understand it, is that in order for a creditor to put the data with the credit bureau, they have to pay for that account. So some creditors will not report to all three bureaus because they don't want to pay all three bureaus if they don't have to. And usually, if you're late, they'll go ahead and spend the money and ding you with all three. But if you're a good payer, maybe they're just going to send your data to TransUnion and save the fee on the other two. So I don't know that we'll ever get to a one bureau scenario, but I do think with AI and people can say whatever they want about AI. There's lots of people that love it, use it. I'm not a fan of AI. I think AI is going to turn us into a different civilization. I think we're going to regret some of the progress with technology eventually. However, there is nothing stopping it. It's coming. But I think with AI, as you've seen with like the home equity lines that we can do, you don't even put a social security number in and get a credit report. They've somehow with the AI can get a credit report or adequately determine the credit risk with just the name, address, and date of birth of the consumer. So we may be getting away from three bureau credit reports down the road anyway.
Mhm. We have to make it cheaper because, you know, if in a down market, in a recessionary market, I may pull 10 credit reports and do three or four of those loans. At $200 a pop, that is a lot. That's a lot of money to spend to have six of them not work, you know? Um,
And we don't charge the consumer for those
no,
reports unless you actually close a transaction. Most companies aren't going to charge you for a credit report. At least we don't. I don't. I don't
right.
think it's right to do that. So the people that are closing are technically paying for those other credit reports somewhat, somehow, indirectly with their loan business. It is kind of a socialist system in that regard. There may be better ways to do it. I'm probably not the right person to come up with those solutions, but what I do know is that it is becoming more expensive, and really all you can do, in my opinion, is ask the seller for concessions or pay it yourself.
Well, and I don't think a difference if even if it goes up from 150 to or 250 to 350, depending on what the prices are, it's really not going to be an eye opener for consumers. It's more of an industry standpoint. It's like, how in the world? I mean, I do know 23 years is a long time ago, but $17 23 years ago, this has got to be one of the most inflated prices for this same data. I mean, I feel like I get the same data that I got all that way back then. I actually had bankruptcies and liens attached to the credit reports back then.
Sure.
So it was more searching, and a lot of that stuff is done through LexisNexis, which I do believe you are correct on. Not LexisNexis. What is it called? Well, yeah, isn't that LexisNexis? It's the legal. They do everything legal. You can buy leads, like mailing list there. They have more information on you than you have on yourself.
It is definitely called LexisNexis. Many, many years ago, in my first career as a claims adjuster working for a big insurance company that shall go unnamed, I actually worked for multiple, but LexisNexis was a tool that we used to track down people that maybe didn't give adequate information when they had their car accident. So if I had a license plate, a name, a phone number, any bit of data, I could track down not only you, but your entire family, your entire bloodline, sometimes your friends. The amount of data you can get with a LexisNexis account, I don't know if a general person can go get one. You may have to work for a company to get access, but you could become a private investigator with the amount of data that they have. Begs the question, how do they collect all that? Where does it come from? But rest assured, there is data out there on you.
Yeah.
Google your name and you'll see just on Google, a lot of stuff pops up that you wouldn't expect.
And so to me, I feel like you are right. I mean, if I don't like AI being involved in all parts of our life because I feel like it's going to dumb down society because they're not thinking for themselves. Everybody's just running to Chat GPT to come up, ask a question instead of researching or looking it up themselves. But if it means that it can minimize the cost of the credit reports or fraud runs or tax transcripts. I mean, all that stuff should be really made much easier than they are. I also think that it's entirely too tough for somebody who has like identity theft or has something fraudulent hit their account. It's entirely too hard for them to get it removed. It used to be a lot easier than it is now, I feel. But there's definitely some things that need to change, and I think AI could be helpful with that.
Sure, AI does have some positive things about it. My wife and I were chatting about it last night. I think the real detriment is AI gives the government the ability to really become a surveillance operation. Um, Anything you post on social media, I'm sure is already saved, but AI speeds that up. You mentioned GPT. I'm a Grok man myself. I shout out to Elon Musk. I think Grok is a superior platform to Chat GPT because I feel like it's programmed with less bias, at least in my testing of the two. And there's plenty of other AI options out there. I use it occasionally, but I am not one of those people that has delved into it and jumped in head first. I'm sort of dipping my toes in the water. I don't like the AI created videos. I think it's weird. Um, but you know,
I do too.
as my wife would say, you get left behind if you don't get on with the program. So, we're incorporating AI into our business in terms of running reports and things already. I don't think what we're using yet is very advanced. I think we're, as a company, dipping our toes in and trying some things out, but I'm curious to see where it goes.
Yeah, me too. But once we get there, we can't go back. And then, it's like imagine everybody starts relying on AI for everything, and then something happens where AI is gone. Like, will people even be able to function? Because if they've relied on something, like I can't function when I can't find my phone. It's like, you know what I mean?
Yeah, that's a challenge. I mean, we already tend to be tied to our electronics a little more than maybe we should. I do think that there is a segment out there, the population, Gen X in particular, that would rise to that occasion and lead the way. Um, I still very much rely on old school methods for certain things. I'm not using my phone for everything, but Um, obviously we were the generation that was paying for groceries with a check.
And
If you didn't have
balancing it.
yeah, if you didn't have cash, you wrote a check. You weren't swiping a card most of the time. Credit cards were available, but you just paid with a check.
Yeah.
So
Or what about, you remember traveler's checks?
I never used travelers checks. I didn't trust them.
We used them when we went one trip. I can't remember as a kid, but it was the big thing. Go get the traveler's checks.
No, I never got into the travelers checks. I'm so glad, by the way, that I don't have a checkbook. I had a pool guy a couple years ago do some work for me on my house on the pool, and he asked me to pay him by check, and I was like, "Look, man, I don't even have a checkbook. I'm gonna have to just get you cash, or I'm gonna have to pay it by card." And he didn't accept cards, so there are still businesses out there operating on a cash basis or an old school
Checking.
basis.
Yep. And
Um,
I mean, mainly, I think that comes down to not wanting to pay the square fees, the transaction fees. And I mean, I kind of don't blame them, but well, why don't you do what my doctor's office does, or what a lot of people are starting to do is they roll it into the price. So if it's a 2.4% charge, they're going to charge you 2.4% more on the card. Um, and I'm still all for, let's just make a consumption tax and get rid of income tax. If we could do that, I think it could change everything for the better. You would have
I
no
agree.
property tax, no estate tax, no luxury tax, no capital gains tax, but you pay tax on everything you buy that's not food and it's not essential.
And guess what? You're already doing that. Maybe it goes up a little bit, but
Yeah.
you can decide what you're buying. And the Bill Gates and the Elon Musks of the world, if they not that Elon Musk is buying a super yacht, but if you're a trillionaire or a billionaire and you want to buy a super yacht, you're going to pay a huge tax on that. And that's how you really, in my opinion, get the proper taxation out of the wealthy. But in the end, I don't know that the politicians are going to stop taxing us or make those moves. We can hope.
Well,
Uh,
and the people who don't want to be giving their money to a corporation or, a certain company because they don't believe in their views or whatever, a consumption tax would do exactly that. That even your tax money, there's no way that money, your money, hard-earned money, is going to help support that company that you don't like because you don't buy their products and we don't tax you and take that money and give it to them. I think people would be happier because then they know where their money is going.
Unfortunately, our society is not comprised of enough people that are like-minded in that regard, and that's okay. Um, I do think that there are some areas of government or governing the population that probably need to be left to specific fields. And I don't have all the answers there either. Even economists to me sometimes sound like they're bananas with Harvard degrees. I listen to some of these guys on newscasts or social media videos, and I'm like, that is just absolutely the worst advice coming from an economist. Um, so it's really hard to know. Um, Gosh, before we go, I got a client that came in last week, and guess what he has that we talked about on our last session where we got together.
What?
Take a wild guess what he's got on his credit report that's going to make it very tough for me to get him a loan.
Car.
$1,000 plus car payment. Just bought the car.
Oh no. And he's probably upside down on it.
Yeah, I mean that part is not such an issue for what we're trying to
Oh,
do,
because
but
he doesn't want to trade it. But I
the
hope.
buying power now is completely gone. $1,000+ a month of your buying power makes it so that you may as well live in the car. It's going to be you're only going to be able to get a house that costs as much as the car payment. I'm working on that, trying to figure out an angle, but I felt like I almost jinxed myself by talking about it last week. Oh gosh, it's been 2 weeks now since we did that last chat.
Yeah. But yeah,
So
that was a big deal though, because we were like, I hope the car's comfortable because you're going to be sleeping in it.
don't buy the $1,000 car payment. You don't need it. You don't need it.
That is the biggest pet peeve of mine. Um, or having like 15 pages of collections and wondering why they're not able to buy because somebody did them wrong and it's everybody else's fault. Those are my two pet peeves. Seeing 1,000, 1,200. I mean, what is the largest car payment you've ever seen?
Well, I can tell you that I'm sort of a hypocrite because I do have a Yukon XL and that payment is like 960. It was a zero APR loan that I took, and I think I have like 2 or 3 payments left, but I can't wait till that $1,000 car payment is gone. It eats up so much of your monthly output. That money could be going to much more important things than a car that maybe is only going to last a few more years. But
Yeah. The
don't do the
highest.
$1,000 car payment. Take it
Yes.
from me. I've done it. It's not worth it.
Yeah. I mean, well, and the highest one I had was 2,100 a month in a car payment. I think it was a Bentley, if I'm not mistaken. Um,
You know what? You can go buy a late model Bentley for like 30 grand.
yeah,
Don't
yes.
buy a brand new one. You don't need it. And on top of that, you can't get parts easily in the United States for a Bentley. So don't buy the Bentley. I thought about it at one point in time just because I wanted to spoil myself, but I was talked out of it by one of my car guys, one of my friends that knows cars well. He said the Bentley is the worst car you can buy as an American because you can't get parts.
What about Maserati?
Mm. Truthfully, I don't know much about Maseratis. They're nice looking. I know some people that drive them, but I hear that the parts on those are a little challenging as well.
You have to
Uh,
get one oil change every 15,000 miles, and it's like 2 grand, something like
Oof.
that. 1,500, something like that.
I want to get one of those bare bones Toyota pickups
Me
if they
too.
make them
They're so
legal.
cute. I
Well, I don't
want
know.
one.
I don't know that I describe it as cute. I don't know that the man in me wants to be looked at as driving a cute little truck, but I just like the rawness of it. I like that it's bare bones. It's got electric windows, but everything else is just super basic. And that's all you really need is air conditioning, a radio, power windows at most,
Yeah,
and the ability to haul stuff.
yeah. Well, and cars depreciate. There is a epidemic right now that I feel like is going to hit. And apparently JP Diamond talked about it a couple of days ago. I didn't get to hear it, but I heard the report that there are more people defaulting on car loans. It's like a 32% default rate, higher than it's been since 2009 or 2011. But the problem is that the banks are trying to refinance these people and they are upside down. So
Yeah.
there's no ability to refinance them. So they're just having to repossess the cars. So I feel like that if you're looking to buy a car, it might be good to wait a little bit longer because those prices might be coming down because a used car that's, been repossessed might be coming available. But interest rates are also coming down. One thing I will say, and into your response of the $1,000 car payment, I just had a couple that contacted me. We did a 2.875. It's a beautiful rate. They have run into something that they needed fast cash for, and they only needed 20,000. So of course I went to the very fast HELOC we have, got them a fixed rate HELOC, but when they went to accept the offer, I knew they only wanted 20, but they ended up taking 45. I told them, I said, listen, you need to think about this because you need 20, but it might be helpful if you pay off that car payment. And what did they do? They talked it over that night and they realized we can take another 15,000 or 20,000, pay off that car payment, and now we're saving $760 a month or 670. That, just spreading it out, your equity is no good if you're not using it, and you're not going to realize the equity until you sell it. So if you need to consolidate debt, and you have a super low rate, one of the best things you can look at is a fixed rate second HELOC, We have a fixed rate HELOC, which is a 30-year. Those are excellent ways to basically get your debt load down and get back into a positive position while we wait for this inflation to get better and mortgage rates to get better.
I actually had my father call you a couple months ago, and he did one of those home equity lines here in Florida because I can't write for my own family members. So naturally, I had you do it, and it saved him a bunch of money. He was able to close it in a week. He raves about it. As a matter of fact, I sent my uncle to you a couple years ago to do a refinance, and now my uncle sends his friends to you instead of to me. So I got a bone to pick with you on that. You're stealing all my family members' friends and coworkers now. I'm losing business.
I know he invited me down for Thanksgiving. I told him it might be a little weird. No, I think you were watching his dogs, or
The dogs are at my dad's house. I'm not watching anybody's dogs. No,
okay,
thank
yeah,
you.
yeah, yeah. And he's like, "I'm gonna kill you if you don't come down here and see me and come and tell me when you're down here next time." So I told him, I said, "Next time I'm down there, I will make a point. I will come see the Waldman family, and I will see you all." So, but I love them so much. Your dad's great. Your uncle is great. I feel like I'm like a extended sister that never got to grow up with you. That's pretty much it.
Yeah, they're great, except they send all my business to you.
Well, I haven't gotten business from them in a long time. And you know what's funny is I'm
That's
I'm
true.
asking your uncle, and he's like, "Oh yeah, I don't think I told you we paid our mortgage off." And I'm like,
Mhm.
I was just so happy to hear that. I mean, he's like, "Yeah, we retired and we're done, and we're living the good life, and
They are.
that's what it's about." And now he's got you real close, and um, talks about seeing you and seeing your dad, and having a lot more family time. So I'm really happy for them, and I got to get down there where it's 75 degrees instead of 40.
Yeah, it's getting a little chilly now. It's probably closer to 65 as the sun's kind of going down. It's starting to get closer to that time, but I'll tell
Shut
you,
up.
Florida is the best decision I ever made in terms of where you want to live, where I want to live. I
Right.
love it out here. I can't get enough of it. As a matter of fact, I'm getting calls from some of the team members that work with me asking about when I'm going to come back to Virginia Beach for a work trip, and I'm like, I want to come, but I don't want to freeze. It's like snowing there. So
I thought you were going to say that they were calling you to ask to move to your Florida branch.
no,
That would have been even funnier because
yeah,
I mean, Virginia weather is pretty close to Georgia, but
sure.
y'all get a lot more snow. I can't handle that snow. I hate it.
I don't like the snow either. Once in a while, I can tolerate it, but I'm mostly into sunshine and warm weather.
How are your kids liking making sand snowmen instead of snow snowmen?
As a matter of fact, they made a mess with some sand in the roundabout the other day, and I'm like, "Where did you guys even get this sand from?" We've got little gopher moles. I don't know what the
Yeah.
proper name of them are, but they're smaller than a squirrel, and they basically dig up holes all over the place. And my kids go get the sand because Florida is just one big beach with growing on it,
Right.
and they made some sand castles on the roundabout. So I've got to figure that out because it's blocking the driveway.
Oh, wow. Well,
I
they
know
made their own version of snowmen as sandcastles.
they do. They have a ball out here. There's so much for them to do. They run around. They got lots of acreage to go play on, so they get a lot of sunshine and do what kids should be doing. Um,
Yeah, outside
quite
till the
frankly,
lights came on.
I wish I would have done this when I was younger, and my two oldest were able to get this. My 15-year-old daughter Chloe, she's obviously living here and she's enjoying it, but she's not running around outside um, playing and such. You know, she's a teenager now, so she's doing grown things. But um, the best thing that I felt that I could do for my younger kids was to put them in a rural setting where they could run and play and have some freedom to explore. And it's been great. I love rural Florida. Plus, I'm still close to civilization. I'm 45 minutes to that hockey arena if I want to go catch a hockey game. So I
Yeah.
like it.
Well, being close to Tampa, but being out and out in the country per se, a lot of people don't think of Florida as a rural area at all, but there are a lot of more rural farmland areas that are away from the hustle and bustle and all the craziness of like Orlando and that kind of thing. So it's not all tourists all there all the time, especially in your small community.
No, I've got a nice little hobby farm, and if you're looking to relocate to the state of Florida, if you're not sure, I know there's lots of states right now that are seeing people transition in and out. If you're thinking about Florida, give me a call. Let's talk about it. I definitely can give you the pros and cons. I've been here for about 5 years. I bought my house sight unseen. I did my research. I learned the areas, and I did a great job with what I purchased. And I'm happy to help anybody interested in moving to Florida. I will hook you right up. I know exactly what to do and what your flavor is. We'll figure that out.
Yeah, and he can help you on real estate, also on mortgage. He's in Virginia, North Carolina, and Florida for licenses on the mortgage side. And then you just do Florida real estate,
I
right? Not
just sell
Virginia.
real estate in Florida. Yes,
Okay.
ma'am.
Yep. And then I'm now in 10 states, so if I can help with any mortgage needs, I can always help you out. And if I can't help you out, I can refer you to someone who can. But thank you so much, Brad, for coming and talking again. I love doing this with you because we get a lot of talk out and things that people are hearing headlines and seeing things in the news. And it's good to actually have some common sense talking about it and letting them know it's not always about the big headline. It's the body and what comes after that.
We've been having these weekly conversations for what, like 7, 8, 9 years now.
Yeah.
Anyway, so we may as well do it and let everybody see it at this
Yeah,
point.
exactly.
Um, I always enjoy chatting with you. I think you're a wealth of knowledge. I trust you with my own family to work on their behalf. So,
Well,
I
ditto. If I ever have anybody who needs anything in Florida, I'm going to be sending them to you because I definitely you're like my brother from another mother.
you got it.
Yeah. Well, thank you so much, and we're definitely going to pick this up again after Christmas. So be on the lookout for another one from Brad and I, and maybe he'll be in front of his tractor, or we'll have to see what next landscape we have planned out for
Maybe
you.
I'll go to the beach next time. Who knows?
There you go. It might be a little windy. You might need a microphone for there.
Yeah, maybe we'll wait till spring for the beach. It's warm, but you're right. The winter time brings a lot of wind down there.
Yeah, yeah. Well, thank you so much, and we'll end it there. Have a good one.
You too. I'll see you later.
All right, see you later.